Since 1983, FAME has helped business and education work for Maine. Contact the authority, the Finance Authority of Maine.
Welcome. This is our Afterthoughts segment where we keep our guests around from our broadcast show for some extra discussion and hopefully a little more candid conversation. Today we are at the Real Estate Convention Conference, the Merita Conference in Portland, and we have today Drew Sigfridson, broker from CB Richard Ellis, the Boulos Co, Greg Perry, broker with the Cardente Commercial Real Estate, Doug Erickson, broker of Coldwell Banker Commercial SoundVest Properties, and Chris Paszyc, broker with the CB Richard Ellis, the Boulos Company also. So thank you guys for sticking around. We appreciate it. I just want to have a little more conversation about and put you all in the room, and since you are our experts, to kind of pick your brains about what's really you think is going to happen statewide with real estate in 2011. We did a little kind of talk about 2010, and I want to get your kind of thinking about where we think we're going with 2011. So in general, it was interesting with the southern Maine folks we're talking about it, and the central and mid-coast. There was a little bit of a different story. Some of it had to do with the build-out down in southern Maine, and more vacancy available. Less vacancy, I think, and more stable market, I think is what you were saying, in kind of the central Maine area. So what do you think is going to happen just in general with commercial real estate, both industrial and office space, for 2011?
I think it's difficult to compare the two markets because in southern Maine you have so much more product. In greater Portland alone there's 11.5 million square feet. So it's going to have more vacancies and it's going to take more time to fill those. Mm-hmm. But we see demand starting to pick up. Fourth quarter of last year, first quarter of this year already, things are starting to pick up.
But what do you quantify that for me? What do you mean by pick up?
Sure. There are tenants that have historically been looking at, say, a 6 to 12 month period of, how are we going to do? Should we consolidate? What are things going to happen politically, economically? Right. What's this market look like? Now, people are starting to feel like there's not going to be that double dip recession. Okay. We can invest in new products. We can invest in growth. We can hire new people. And we're already starting to see signs of that, where people are deciding to invest in their business and to expand. Okay, let me stop you there. Let's see how everybody else weighs in. Are you all smoking the same stuff that Drew's smoking, or no? It sounds like some good indicators, what you're saying. Do you agree? Yeah. Preliminary.
Unfortunately, though, especially in central Maine, that's so dependent upon government and nonprofits in Augusta. And what we're going to start seeing is the lease space contracting within the state, which is going to create more vacancy.
What's your prediction on that? How much percentage do you think they'll be able to? Do you have any idea?
I would just be taking a guess at this point, but I think it's going to be substantial.
Could be 10% substantial of space.
25%.
Okay, really?
I think it's going to be. I think it's going to be a big number. And so so you're going to see vacancy. You're also going to start seeing the vacancy, especially in the B quality product.
Right.
So the dynamics of all that point to definitely some growing pains would be the wrong word, I guess.
Right.
But
the industrial side's a bit different. I think that we're seeing the larger buildings, the more antiquated buildings, the more functionally obsolete buildings really struggle to find tenants. Landlords are making pretty big sacrifices to try and get those tenants in.
Are those old places ever going to find tenants? Are they eventually going to be knocked down?
It's a tough question.
Yeah.
I think that there are
sometimes all they need is a bulldozer, right?
Yeah. Okay. I mean, there limited clear height, some real functionally challenging problems with some of these spaces. They were built for a specific purpose, and now we're trying to find new uses for it. And it's certainly challenging. We're starting to see on the industrial side smaller leases, smaller, kind of the grassroots, the bread and butter of the industrial, under 5,000 square feet, the flex units, 1,500 square foot flex units, and that's kind of the foundation of the industrial market. I think that as we see that start to evolve, it will be good.
Are any of those smaller ones, are they starting to partner, like those smaller, I always think about those, I always say the ones that are ready to come out of the garage and move into that 5,000 square foot for, and then maybe they're ready, are they starting to look for combined space that they can share, or is that?
I mean, I think we're starting, the 1,500 square foot flex unit's kind of our incubator unit. Those are where we start to see smaller businesses evolve.
Okay.
And we're seeing activity in that market where we didn't see it in 2009. Okay. It was the biggest concern we had in 2009, is that these smaller deals that we've always counted on, that we've always seen, have really dried up in 2009. And in 2010, I think it was encouraging to see that activity with the small leases. The bigger spaces are going to continue to be a struggle.
See, and I think that's another key indicator. I mean, you've got all the good indicators where it's coming with some of the industrial stuff, but that small industrial piece, and that's real that's real investment,
Right.
and real investment in business growth, I think.
Yeah.
The Midcoast is a little bit different.
Yeah,
Talk
we're
about that.
in a little bit difficult market right now because we have such a low vacancy factor that
Yeah.
if somebody coming into the area wants to have any kind of a, say 10,000 square feet or more, we literally don't have the space to put them into. So that's going to be our downside, is the lack of space. My concern is that what happens in Augusta, where you're going to have a lot of vacant space, that might have an impact on our market. And that's a little early to tell, but that's my biggest fear right
Interesting.
now. That's the same thing with retail. Anybody needing substantial retail space, we don't have it. So it's going to have to be built.
Yeah.
And the question is, then can the tenants afford to pay the rents that are going to have to be paid to substantiate the
Right.
construction of the property?
One thing I wanted to follow up on, which I think is kind of related to all of that, and Chris, you mentioned it during one of the breaks, was that difference between base and B space and industrial space, too, for that matter, and kind of how that's changed now. There's more A space available, so people are moving into that, moving out of B to A. Is that how you see it? And does that leave a lot of the B then that's sitting there? Is that the problem? The problem property? Yeah, has that been the
You see pricing come down as well. So,
Yeah.
these A properties, which were historically maybe too expensive for some of these tenants to go into, those landlords need to provide incentives. They just want to fill their properties. So they may bring their pricing down to what B prices used to be.
Yeah.
And so now some of the B property owners are left with some
What we're
long-term vacancies.
What we're seeing in our market is that the B spaces are going first. And as a result, we've got some vacancy in the Class A space. And that's the problem we're having trying to fill that.
Is there, I was also asking this, can anybody define Class A versus Class B? Is there a standard for that, or how does that, who gets to say that?
There are standards for
Okay.
Class A versus Class B, but I think in Maine we adjust our standards to be
the region?
to the region,
Yeah.
really, and
Okay.
it's relatively speaking.
Yeah.
Class A is going to have higher end finishes. It's going to be an A location. It's usually going to be a newer property, fully handicap accessible, exterior and interior finishes being of exceedingly good quality.
Right.
As opposed to a B property, which is still going to be fully handicap accessible, still be very serviceable, be in perhaps a little worse location,
Yeah.
maybe proximity to parking not as good, but those are some of the differences.
Okay. I was also asking Chris when we were talking about in Lewiston, Auburn, the kind of those old mill structures, the old industrial pieces, kind of in the town itself. What's going to happen with those? Are those anything happening with those? And you were saying not as much. Some is happening, but also it's hard to fit those out.
They're being repurposed.
Right, but it's not for the industrial.
It's not for industrial
Right.
anymore. Right now in Lewiston, Auburn, we're starting to see there's a lot of business park projects in the works right now. You're seeing Dave Gendron especially building a lot of industrial buildings that are that meet the demands of today's tenants. So in the older mill properties in downtown Lewiston, you're starting to see them being converted to housing. There's one major housing project that's that actually just received financing recently at the Bates Mill. So you're going to start seeing housing and other repurposing.
Is that the standard around? I mean, is that repurposing? Are we going to be able to use those buildings and really repurpose them? Is that really going to be able to happen for housing, as an example? And are you saying that?
I mean, certainly the Pepperell Mill,
Yeah.
where West Point was,
Yeah.
Doug Sanford down there has got a pretty ambitious vision. You
Yeah.
know, and so it's more of a campus concept.
Yeah.
It's not going to all be industrial space. He'd like to have education, medical, a variety of uses that take up that campus, which previously was more industrial space. So definitely a transition. I think there'll still be industrial uses there, but you've got to kind of be creative and think outside the box with some of these spaces to get some activity.
Kind of last question. I did ask you all earlier too about just kind of the availability of capital out there to do some of these things. What's your advice in terms of working with, if I'm wanting to get into one of these spaces, there's some great spaces available, I'm wanting to move to the next level. One, what kind of deal can I really work with that landlord? Is there anything I can work directly with that person? And when you talk about incentives, what kind of things are you really talking about? What's out there? What are landlords willing to do?
Well, actually, I was talking with Greg earlier. He had done a study, and maybe you could talk about it, of the difference between asking rates versus deal rates for industrial property, and it was in the range of 20% less.
22%. Yeah, I mean, as far as our database, and that's what we have to go by, our database of commercial real estate.
Does that sound right?
What we're seeing more in the Mid-Coast is that the tenants are getting free rent for a period of time, and it's generally 1 month per year of the lease.
Yeah.
And that's the incentive that seems to tie them into the building. Plus a little bit of finishing off on the inside of the space.
We're also seeing landlords willing to do build-to-suits for tenants. So if they have a vacant space that maybe doesn't fit the tenant's needs, the landlord will be willing to build it out to fit the new tenant's needs.
Is that what they're going to do for some of the Class B stuff, to really kind of do something with it?
Yeah.
They're going to have to, I guess.
Yeah. And whereas they used to be able to charge for all of those build-out costs, sometimes they're not able to now, but they still just want the deal.
Okay.
I think the important factor is that the landlords are now more willing to work with the tenants than they have been in the past.
Yep. They have to.
Yep.
That's
to fill the buildings.
Okay, I guess that's the last question. So, is that the new normal? You know, we're always trying to figure out the new. We've gotten rid of the double dip. That we're all agreed that's gone. We're agreed that we're going to bottom out this year. All right. I think we are going to bottom out with the real estate. Okay, good. I think I'm hearing that. But is this going to be the new normal then for kind of the real estate, for the commercial real estate market?
Until we hit 5 or 6% vacancy again, you know, I think that it's going to be a bit of a tenant's market until the vacancy rate really comes down.
In general, yeah. I mean, I think there are pockets that may be different. That's what
I think probably for the next 3 to 5 years, I think this is going to be the norm.
Okay, so get your space while you can, right?
That's right.
Okay, good. We're going to wrap it right there. Thank you all for sticking around. Appreciate it. Thanks.
Thank you.
Thanks.